All right, guys, let's quickly do a trade breakdown on gold XAU USD. Let's quickly do a trade breakdown. So, gold has been in a bearish move. The primary trend for gold currently is bearish. All right, because gold was selling, it did this bullish move just to mitigate this bearish supply level. This supply level, gold mitigated the supply level and continued its bearish move. When you mitigated the supply level, if you trade direct entries, you don't trade with confirmation, you can get in on this trade and you still be on that bearish move, right? The bearish move is most likely going to clear this low. Most likely going to clear this low. Everything we do in the market is probability based. Anything can happen, but the higher probability is that the market clears the low, is that the market actually clears this low. All right. This is the 4 hour time frame, no confirmation, direct entry. But we're not going to look at that today. We are not looking at this. This overall bias I just showed you is why gold is still bearish. So in this bearish move now, starting from when it mitigated this supply level, when it started selling, you can be getting in and out of the market using the 4 hour time frame as your what they call it as your higher time frame zones and getting confirmation entries. Now, the first thing it did was immediately it mitigated our zone. It dropped this low, created this high, swept this high, and then broke this low, giving us an area of supply here, a supply level here. That supply level was mitigated around here. You can see there's a break of structure here. Some people call it market structure shift, whatever you want to call it, because a valid zone is a zone that broke structure. Broke structure has an imbalance. We've discussed what a valid zone is, so you can always go to my channel, Big Blue FX on YouTube, and it will give you some level of enlightenment. Now, when gold broke this low, formed this supply level here, you can see some level of imbalance there. There's a level of imbalance there, very minor, but it's there. Just this imbalance level. You can see this imbalance level. When price came back to fill that imbalance, it didn't fill it completely. It just mitigated the imbalance, sold. Some people will feel, oh, I've missed this sell from here, but this sell was actually an inducement. All right, this was an inducement. It's what we call engineered liquidity. When gold did all of this thing, it engineered this liquidity and then finally mitigated that zone and sold. So that would have been our first entry. From here would have been our first entry. Direct entry on 4 hours. Our second entry would have been, sorry, second entry would have been after it did all this sell, it dropped this level of supply again. It dropped this level of supply, and this would have been our second entry that currently gold is reacting from. All right, this is inducement liquidity. This one here is inducement liquidity. These people that sold from here would have thought, oh, I got the sell, I did this. This sell was an inducement sell. That was not actually the message because if you look closely, you see that this place has equal high. You can see the high of this candle and the high of this candle. So there's definitely liquidity resting there. Not just liquidity resting there, there's a valid supply zone resting above that liquidity. So most definitely market is going to come back and mitigate that zone. But this is not what I want to show us today. What I want to show us today is trading this with confirmation. All right, trading this with confirmation so that you always trade with confirmation. What does confirmation do for you? Confirmation helps you to maximize the potential of the trade and also helps you to validate the trade, to confirm the trade and make sure that the zone will hold. Confirm that zone and make sure it will hold. For this case, let us see how this zone played out in its confirmation entry. Sometimes a zone might not give you confirmation, it will just react and start moving without giving any confirmation. But trading with confirmation helps you to, you know, get cleaner entries and helps you to get better trade return. So let's look at this zone now. When price did this, broke this low, remember what validates a zone is that the zone broke structure number one, the zone has efficiency, which is imbalance number two, the zone, if it's a supply zone, it's at a premium of the range. If it's a demand zone, it's at a discount of the range. So this zone meets all that criteria from this high to this low. You could see that this zone is actually at the premium. Premium is anything above 50%, 0.5. So it's at the premium. So it's a supply zone. It has imbalance. You can see the imbalance. It broke structure. So it's a valid zone. Once you get your valid zone, you mark out that zone and start waiting. All these sell can happen without you. You just start waiting for confirmation. Now for 4 hour zones, confirmation entries appear on the 15 minutes. The lower time frame confirmation entry for 4 hour is the 15 minutes. That does not mean you cannot get it on any other time frame, but 15 minutes aligns better with the 4 hour higher time frame zones. If you have a higher time frame zone that is on the 4 hour, your lower time frame confirmation entry will most likely form on the 15 minutes. Like I said, it is not a static rule. You can explore other lower time frame zones, other lower time frames for your confirmation, but it works mostly with the 15 minutes if you have your 4 hour zone. So let's look at the 15 minutes and see what price did in the 15 minutes. Let's see, let me take off all these things. Let's see what price did in the 15 minutes and how we would have gotten in on this sell. Now we consider our 4 hour zone when price mitigated it. When price mitigated it, you can see our 4 hour zone. All these things that happened here, how would you have caught this trade and made money from this trade? All these things that happened here, how would you have caught the trade and made money from the trade? All right. Now look at what we would have done. There are three types of confirmation entry. If you've not seen my video on confirmation entry, kindly do so. I strongly recommend it because price will always give you one of the confirmation models, either type 1, type 2, or type 3, whatever one you want to use. Make sure you know it, because what price actually did here is type 3. On the 15 minutes, you want to see either of this. Let me just mark out the types. Price tap into your zone, clears the liquidity inside of the zone, clears this last high, breaks structure, comes back to do something like this, drops inducement, this is structural liquidity, comes back, mitigates your zone, and then dumps. This is type 1. You can see something like this in your confirmation. All right, you can look for something like this in your confirmation. Price does this, drops a low, clears the high of that structure, dumps to break structure, comes back to drop structural liquidity, breaks another structure, and then mitigates your valid supply zone on that lower time frame. This is type 1. That one works. Look at type 2. Price comes to your zone, mitigates it, clears liquidity inside of your zone. Without breaking structure, it forms an inducement and then breaks structure and then comes back to take the valid supply and then dump. This is type 2. Type 1 is the one that forms structural liquidity. This one is inducement liquidity. Without breaking the structure low, it just formed a new high before dumping to break this structure and this other also internal structure. So this is type 2, but that is not what we have here. That's why you need to know the different types of confirmation. What we have here now is the one I want to mark, type 3. Type 3 is when we have price tap into your zone, comes down, sweeps that high it created, comes down to break structure, all right, comes back again as if he wants to sell, does something like this, and then mitigates your zone, and then sells from there. This one is what we call engineered liquidity. Price engineers liquidity as it is approaching your zone, because there's no inducement here, there's no liquidity, there's no structural liquidity here, there's no inducement. So what price does is that as it's approaching your zone, it creates an inducement. It creates a liquidity level for it to get some people into start that will start selling early. So all the people that sold from here, price will clear them, use them as liquidity, clear them, and tap into the raise zone before it will sell. So these are the three types of confirmation. You want an in-depth explanation on this, go to my channel, YouTube, Big Blue FX on YouTube, and you will get it. So let's look at what confirmation did price do here. Let's put this. Was this what price did? Was this what price did? Was this what price did? Price used type 1 here. Price used type 1. You could see what price did. So it's type 1. Price was buying, created this high. When it created that high put in a low. Now this low, price used it to come all the way to this high, clear this high, put in this low without breaking structure. So this one is actually type 2, because this one is the one that did not break this structure. It did not break the structure low. It did not break the structure low. It's not type 1, it's type 2. So without breaking this last structure low that it put here, without breaking it, it went all the way to create a new high. Okay, did it break it? It broke it here now. It broke it here. So this was what price did for the confirmation. Let's mark it clearly. So price was buying, putting this high. Let's just say price putting this high. After putting in this high, putting this low. Then he put in a new high. Then price came all the way. All here it was ranging. Came all the way to this low. This low did not break this low. Then he put in engineered liquidity somewhere here. Took out that low and then mitigated our entry and then dumped. You could see the confirmation model it's used here is what? Type what? Let's mark it. Let's quickly mark it and see. Without breaking the low, clear the high. Without breaking the low, did something like this, broke the low, and then mitigated. So this is type 2. You can look at it here, type 2. The confirmation that it gave here is actually type 2. I was even thinking it was type 3. So this was type 2 confirmation entry. You actually need to see one of these, type 1, type 2, type 3. So immediately you see this, you now mark your zone. Now this is the 15 minutes. Our value zone is this place here, this supply. So mark our supply. All this thing price was doing here is none of our business. Price engineered liquidity around here is none of our business. Broke this low, it's none of our business. We are not going to enter from here. Here is also liquidity, even though it's on the 15 minutes. And then we wait for price to mitigate the zone. And then we can take our sell. If you look carefully, you see that that was what market did. Mitigated our zone. Your high, your stop loss will be here. And then you're targeting, it's either you're targeting the low of the inducement or you're targeting this other low of the structure. All right. For me, any trades, any value trade setup that gives me up to 1:3, I take it. So I target the immediate low, which would have been this low, which would have been that low. So this would have been the setup I would have traded. I missed this trade because I was waiting for the setup I had on the 1 hour time frame. I was waiting for the setup I had on the 1 hour time frame. So this would have been our inducement. This would have been our inducement. This zone here would have been our inducement. That high was the inducement for that setup. So we'll mark it as our idea. So you could see how price mitigated our higher time frame POI, gave us a type 2 confirmation, and then we are out of the trade 1:3. All right, we are out of the trade 1:3. All this pullback is none of your business. Within This price peaked around 4 a.m. By 2 hours later, you are done. Less than 3 hours later, you are done. You're out of this trade. By 6 a.m., 6:45 a.m., you are out of this trade. All right, 1:3, and you are out. You are 3% up. You just keep replicating this, keep replicating this, keep replicating this, and that is how you just keep building and growing. So this is a trade that gave us one ratio 3.48. Very, very solid trade. You want to extend your take profit, you can extend it to this internal liquidity here, this one here, this internal liquidity before you think of this one. This last one here before this proper structure low, which would have given you 1:5, and the trade actually played out before this reversal started happening. All right. Before the reversal started happening, we have a solid 1:5 trade getting this liquidity level at the last internal liquidity before the structure low. Getting that liquidity level, we have a solid 1:5. You target the inducement structure leg, you have a solid 1:3. So in that way, because you took confirmation on this trade, you are in and out of the market. Anything the market is doing is not up to you anymore. You already made 1:5, 1:3, which is very good. But this trade still has potential to clear all this low and continue on the overall bearish trend. It has that potential. You might not have the psychological capacity to hold it. So you can do get in and get out, of course, using valid confirmation. So this was the trade. But look at where I missed my setup. Let me quickly show you guys where I missed my setup. I think I missed my setup. I had my setup on the 1 hour. So you could see this was my hourly zone because I actually caught this first setup. I caught this first setup and I executed it. So I marked my supply zone here. This was a valid inducement level. I was waiting for price to mitigate this zone and they missed it by just 1 pip. I think 1 pip or thereabouts. I missed that entry. It happens like that. You move on with your life. You are going to miss some of your trades. You are going to get some of your trades. So for me, I missed that setup because it played out on the 4 hour with a 15 minutes confirmation. I was waiting for it on the 1 hour zone because I traded this first entry on the 1 hour. So I wanted to continue the setup on the 1 hour. I just marked the zone. It didn't tap it. Who knows? It might still come back to pick it. However it happens, let's see how it goes. If it hits take profit without coming to mitigate that zone, I'm going to cancel the setup. I still have it waiting for it, but if it doesn't come to pick me, I'm going to cancel it. You understand? So I hope you learned something. If you have any question, leave it in the comments. If you want any clarification, you can send me a direct message. However, I can be of service to you. Do not hesitate. Thank you for your time and keep learning. Bye bye for now.